Yeah, hello, good evening, folks. I'm just gonna do a quick review on today's EURUSD and what happened during the London session. So I'm just going to give a little review on what happened in the London session and what I saw. So I didn't. Hopefully, one day I'll trade live. While I record and try to trade and understand and show some a little bit of so today's video is just all about showing how I entered the EU trade before the during the New York session. So let's get into it. This was the opening price for the midnight. I love to do this, not all the time, but I love to do this. This was the opening price New York, and then this is opening price this midnight New York session. This is here. This is the opening price morning session. So this is the morning session. Just wanna make this orange. Well, we know the first one though, so let me make this orange. Yeah. So orange is gonna be the opening session, New York. Morning session. This is the midnight session. So we'll dive down into what can we see here. We can see price. We can see a high here. Sorry, here, right, which is the fair value gap. Traded into it and it came back down, but it failed to take this low. Why did it do such a thing? Because I told you guys this. It failed to take this low, and you can see this low failed to take liquidity here. Why? If you can remember, we were looking at in my previous video, I highlighted this high to this low, and this was giving a good discount for price to buy up. Price came to this fair value gap here and it bought up. If you go down to lower time frame, or if you go to my previous video, you understand what I did there. And we can see price did this thing. Actually did come down to take any liquidity here because this was discount. It came up to premium, came back to discount. We've been looking for a way to get this high done so we can get to equilibrium. Remember, we are aiming the equilibrium of this whole range. If you go down to the daily time frame, I just had to start my video from the 1 hour because so this was the liquidity that happened Friday, and price failed to take it on Monday, which was yesterday, and it came back down. So I was hoping to see this taken, but you had to trade back down. I don't know why it came back down into this. You can see there's a fair value gap here as well. Traded back into this, so I don't know why it did that. So we just have to study price and understand why it had to come back into this deep discount and then buy from this point. But I'm not gonna there's another block here, but I didn't respect it. Came back down deep, closed inside of it, and though it didn't close below it, if he had done that, I'm sure we would have seen price continue selling lower, because this would have been a good point. This price continue selling lower, and that will invalidate our. So it created a double bottom here. It looks like a double bottom, but it's in discount. So I'm not really wanting to see price come back down to this point, below this support rather. So what happened in price today? We can see this is a series of down candles, so I'm going to be respecting this other block. Series of down candle. We are seeing the movement, came back down unfortunately couldn't take this low. Understandably, we are in discount already. So I'm just gonna highlight this down. Now when price did something like this, came back down, broke this high, and it took this liquidity here, came into this fair value gap, and it started selling again. Well, this is midnight session. I wouldn't really advise anybody to trade. This is midnight open. You don't let anybody to trade anything here that's going on here, because all of this here is a liquidity zone, here is a liquidity zone. So what the price do, we can come on waking up in the morning by 6 o'clock, you come and join your liquidity here. This is a good reference point, because why? It traded into fair value, traded into premium, because so let me hold on, let me show you something here. Price deal is still from, you can draw, let's draw from this high here, right? Not pretty sharp. So from this high to this low, traded into what? Good premium, and it sold down. It didn't give deep premium, because all of this, the only thing here we can see is this fair value gap, which occurred after this liquidity was what taken, or it wasn't taken here, but the downside movement happened, and so the fair value gap being formed is a very high one. It's a very good one for price to do what? Get, we can also see an inversion fair value gap here. If price had traded into this inversion fair value gap, I'm sure we would have seen lower prices, but it came back down to do what? To give us a reset in price for what? Bullishness. Order flow, remember we are trying to buy up towards this equilibrium here. Order flow, it has been giving us good ones, and we want to see, we can see, don't want to see price come back to take all of this, which have efficiently been traded. You can see made higher low here, higher high, higher low here, higher high, higher low. So we want to see a higher high, but price didn't give us that efficiently here. You can see it gave a lower high here, and it came back, they gave a lower low. So we definitely want to see this high taken significantly. So price came back down from this low to this high. You can see, let's I gave a illustration on Fibonacci. So what's the next point level? Obviously around this point, which is a very, very good and fair. So price came back down. We're trying to look at, okay, where's the good fair value for price to, for someone to buy this point. The only thing I can see here is this. The things I can see here are this other block. This is another block. Hold on, let me get this out. Another block, and what? A fair value gap here, right? Price took all of this and came back down. You can see when it broke this high here into this fair value gap, took this high into this fair value gap, you can see it formed another fair value gap here. I want to see price trade here. What can we see here? We can see a fair value gap here. It is an imbalance. We can also see an inversion fair value gap. All of this traded efficiently. You can see it's a series of dark candles. We're looking for what? Fair value gaps. Now this is a fair value gap. This is a fair value gap. This is a very good thing to see, and you can point blank. This is nice to trade. Seeing this, beautiful. I came in and highlighted this. I was like, this is very beautiful. This is nice. But obviously, I can't take my trade from the one hour time frame. I have to go down to get more confirmations from lower time frames. Now, how did I trade this? So we can identify this as a fair value gap. Now let's see, go to 15 minutes time frame. Obviously in that range, I don't want to see price. When I saw that price didn't take this low, this is an opening for the New York. What is it? It's in what? In good. It has given us discounts. We're seeing it in premium. This high needs to be taken. All of this, we are in discount. From this high to this low, we're in discount. If the New York Open happened in the premium, obviously would have been a sell for the day, or maybe Yeah, it would have been a sell for the day for liquidity at this downside to be taken, efficiently. But it opened right in, and yeah, so all of this needed to be traded efficiently. This high needs to be taken. This is obviously a breaking structure to occur. Looking at this high to be taken definitely, and what would I have traded it to, like this inversion favor gap here, and that would be my safe point when I came into the market with opening price at this point here. So going out to 15 minutes time frame, this is a lot. This is a whole lot. I'm sure most people won't. Let me take this out first. So I'll take this out as well. You can, all of this is trading, giving consolidation. Market was consolidating in this whole, giving higher. Imagine giving a low here, a high here, a lower low, a lower high, a lower low, a higher low. Sorry, a higher low, a lower high, a higher low. Come on, you want to see, a higher low, a higher high, a higher low, a higher high. You get what I mean? A lower low, a lower high. For a trend to, but this is not a trend. So what did I see here? We have to wait for time and price. ICT always say trade the kill zone. Now the opening time for is 7:30 for the kill zone to kick off. The price market opens at 6 a.m. Wait for the 7:30 candle to show you where price is moving. We can see here, this is the midnight open happened here. Price did what? Efficiently came down, traded back down, didn't take liquidity. What did we see? We saw a move in liquidity here. We are still in the Q zone. It's not good enough. This didn't take this high here. It's not good enough for us to start buying from this point. We have to seek for good fair value. When this happened, this is a breaking market structure, but this high wasn't taken. Gave us a lower high here. You can see there was no sweeping liquidity at this point, and here you can see there's a breaking structure here. Now how would I have entered this? I would have waited definitely for price to give me a good setup. I'll highlight here to be one of the good things to see. This is another block. I will not want to see price close below this particular point. Why is that another block for me? Let me take this one out. What I took out, this particular, is another block as well. You don't want to see price go below this as well. What did it do? Or close below this? You can see all of this closed above this other block. This is the one other block I was highlighting that I said this particular one. Don't want to see price close below this if we are bullish, or everything is in discount. You don't want to see price go below this if we are bullish. Anything that make price close below this other block, then we are bearish. So price didn't close below this other block. In our key zone, we can see price respected it, giving attempt to want to take it, but it didn't take it. So just want to take it out because I don't like the too many structures. I don't mind me. I love. So this is another block I really want to see price respect. Just gonna put it blue. Another block I really want to see price respect. And what the price do? It was doing its thing. You can see in the morning, traded down in here. This is 7:30. All of this 8 o'clock. So it didn't close below this other block when this was taken. Why is this another block? Because you can see that when price, this particular bullish candle broke this was the last dark candle this was a bearish candle. You can see this bullish candle close above this significantly. If you go to lower time frame, this you can see a setup here that shows how efficiently this is. This is another block, and it's the last down candle before this movement. So this is another block, and also you can see this as well. This also can be identified as another block as well. The last dark candle before this high was taken, the last dark candle before this high was taken, you can see it was taken here. So how we are classify that as another block as well. This as well is something to be to watch out for. But now this is another block, but I will take this one significantly, because this one is a dark candle before this high was taken, before the high was taken as well. So but I'm going to reference this one and take this very, very serious. Price took this an order block. I don't want to see price close below this. So what did I do? I watched price. I don't want to see price close below this. I highlighted it, so I just want to take this out. So it's giving me a headache. Sorry, take it out. Giving me a headache. So the essence of identifying those points, the New York morning session opening and the midnight, is just to be able to identify where is liquidity, where is price, and where is it joined to, what is the next liquidity that's going to happen, where is it actually drawing down to. So yeah, that's where you can understand what price is doing. Now we can see if you bring them back, sorry, let me bring them back, dancing all around, took the liquidity here, failed to take this one, traded back down. Why is it trading back down? To give good discount for buys. This is a good this is a good point of high because it took this liquidity, so you can actually look at this, draw your fib from here to here. Is good to do that. It's fine to do that because it took liquidity, it took a high, so you have to, and you see price drawing back down. What do you do? Watch price. You can see it's a 50%. So let me just take this out. This is giving me a headache really. This is good price, deep down. So now this is 15 minutes time frame. I defined reference point and all that. What did I do here? I identify this order block. Now I just want to go down to more. Now I just want to get my entry. Okay, we're in the key zone. You can see we're in the key zone. This is a 9:30. You have to wait, to 9:30 for price to give you a good setup. Now this is a 9:30 candle. You can see we just took liquidity before the 9:30 candle. Do you think we can just start buying from this point? What is going to give you the edge here to start buying from this point? The only thing I can see here is this order block, and the 9:30 candle came and did what? Was actually respecting this order block. But is this efficient enough for me? No. I'm going to use this one. I'm going to use this one, this particular order block to. This is going to be my reference point, for price. And why don't I want to use this one? Because let's see something before I say it. Let's just see something really quick. This order block, look at it. I told you it's another block, right? But where is it? It's in premium. You can see the equilibrium here. It's in premium. Do you want to buy from premium? No. You want to buy from where? Discount. This is very good trade to take because why? It took liquidity here, a break in structure. Obviously, markets are shifted. In the key zone, look at this. Market is shifted in the key zone. Sorry, I'm speaking like this. I just want to try and point what I can see in the market. Now, market came to this point I don't want to buy a premium. This is an order block, so I'm not going to reference this. We have another order block deep in discount. So right, oh cool, I just have to wait. This is 9:30, closed here, they open 9:45. I just have to wait for price to give me the setup. Now why do I say price to give me the setup? I already have a setup, or rather, let's say this is not, let's say this wasn't here. I just want to see price give me good discount in price before I can buy. Price to give me good discount before I can buy. Now, and take this out as well. We can see the reason why. Okay, let's leave it. Let's go to lower time frame for entry. Now, you can see this order block. Price can buy from here. I can easily put my at this order block and leave my stop loss at the low of the order block, right? But that is not just it, it's still fair enough for price to do that. But watch this. We can identify this. There's a fair value gap here. There's a fair value gap here. There's an inflation fair value gap as well. So I would have to use this one cleanly. I use the inversion fair value gap. Why? It's safer for me, right? Because price is just going to test it really. This is how I entered the trade. I highlighted this inversion fair value gap. I was like, oh, this is very good. It's still a fair value gap. You can see this low here as well. It's a fair value gap. This is the last dark candle that I caught, took this high, created a fair value gap, and now price is what? Coming back, traded up. We want to see price come back in. This is this fair value gap. You can see why tell me why I'm not regarding this fair value gap. This is in premium. I don't want to buy the market in premium. I want to see give me good price in discount to buy. My idea, my whole from the 1 hour time frame, you can see my bias is bullish. Why? Because this breaking market structure has occurred during what? During my key zone. It get taking a liquidity, breaking market structure has occurred, and I'm very comfortable, happy about it. Now it has given me a good time and price that, like, look, we are bullish, we're going to be bullish. So I have to wait for price to give me a good setup for me to get in. Now this is it. Look at it. Get in here. I can use this 5 minutes time frame. You can go down to 3 minutes time frame. You can see the setup there is even very clear here. Inversion fair value gap, very clear. You can see this is a series of up candle, bullish candle. You can see the inversion fair value gap here. You can increase it to this point, from this high to this low. All you do, traded into it, and then the midpoint of it, you can see it, the midpoint of it, boom, and you did what? Buy up, and you bought up, right? So you can see how efficiently one can trade this. Because this was what I saw in the market, and this was how I took the trade. I actually took my trade from the 5 minutes time frame, because when I saw my 3 minutes time frame, it was giving me good, I concurred to it. I was like, okay, this is nice. Let me take this out. This is nice, this is fine, this is okay, this is good. So where will be my first target? This will be my first target. And what will be my next target? This high will be my next target. So because of what I can see here, I'll come back to this point here. There's a fair value gap and all of that. There's another fair value gap here. I can see an inversion fair value gap. This is a series of bullish candle, this series of bearish candle. Now you can see fair value gaps created all around here. Fair value gaps created all around here. What am I going to do? This is, we can draw our high from this to this. We can see we want to sell at what's premium. We can draw a fib from here to here and get the premium of this range. You want to sell at what's premium. Me, I took this high. This was my first TP rather. The second TP, you take out something from here and leave, eventually leave price to run. Do I think price he could, but I don't really care. I was okay with my one. You can see, given this is more like a 1 to 3, and I'm good. I'm not greedy. So this was how I did trade my EU setup for today. Price started, everything is 10:30 in the morning, took liquidity, came back there. This is the afternoon session from 1:30. Afternoon session, fair value gap, traded efficiently into this. Why did it do that? I'm from this low to this high, deep discount, obviously traded back up, but we can see that price is taking liquidity here. And let's go to 15 minutes time frame. We want to see a good from this low here now to this high. We want to see price give a good fair discount before we can do what? Before we can buy. You can see falling to this point here. It's a fair value gap here. There's a fair value gap here. So price, which way? Just want to see price from this low to this high. This is equilibrium. We trade to equilibrium. I want to see deep discount before I can buy. So definitely here is a very good point for me. 0.62%. Start buying at 1.14084. Yeah, so we're bullish. We're still bullish until we get to the equilibrium here, and that is a good idea for me. So that was how I was able to take my trade today. You can see the 15 minutes time frame, very good. Pew, got in. Use the professionals are gonna use the order block to get in, but this is Q zone. You draw your fib from here to here, obviously. Yeah, from here to here, you can see that this is key zone. Put your order block here, get to entry from here to this. So people trading this will target this high, but I'm not that. Let's see. Oh, sorry. Like this, you can see. This is good money. Oof. 1, 2, 3, 4. Almost 4.5. 1 to ratio 4.5, which is perfectly good and fine to trade. So yeah. So that is it. Till next time. Thank you for watching.